What's going on, guys? It's the Bulls and the Bears here with a midweek update video for the Wheel Strategy. We are in a couple things. As you saw in the weekly recap, I was assigned, or was about to be assigned, on CVS. I sold a cash secured put at the 86 strike. I got assigned because it closed just below it. And then I woke up Monday morning with 100 shares of CVS at an average price of $85.53. You will see that on my wheel banner when I pull that up. You can see that here on the screen. 100 shares. This is broken up into two segments, but the shares are right here. 100 at 85.53. That's the 86 buying price less the premium received on the put. Because I got paid to buy these shares, and that's reflected in the average price. And then this week, I opened a cash secured put on Activision. I had one last week. I closed it for a profit. Actually, no, I think it expired worthless. And then I reopened it because I believe it is sold off this week, or it sold off on Friday. And then I was able to open another one, same strike actually, for this week on Monday. So we're going to look at the charts. We're going to talk about all that. Here's the account. CVS is looking great. It just had earnings today, this morning. So I'll get into that. Activision is going well as well. You can see the price on my watch list, the spark line of the daily chart, how that's going. The current price, 73. So Activision is 60 cents above my strike. It's not a whole lot. It actually came down quite a bit. It's down 2.5% today, but I guess that IV maybe is coming down, and that's why my profit's up. I'm up 70% on the contract, and then CVS is at $90. It's up almost 5% today following earnings. That is great. I sold a nice high covered call. We're going to talk about that. But first, as always, I'm just going to get into the S&P 500 and just talk about that quickly and how it's shaping up today and this week. So here is the daily chart of the S&P. We are holding this breakout. We did have a nasty couple of days to end last week. We had a nasty Friday. We gapped down this week on Monday to start the week down to 4,100. We actually cracked below 4,100 for a moment. But then yesterday, Powell spoke, and every time that man speaks, we rally for no reason. And the word of the year is going to be disinflation. That's what he said in the FOMC meeting. He said that again yesterday when he was getting interviewed. And the market, I guess, liked it. I mean, if you look at the 5-minute chart, it was horrendous. I mean, we had this huge move, big move. We were up like 1.3% on the day. Then we rolled over. We erased that. We erased all of that day's price action and made new lows just to turn around and make new highs. The market is absolutely insane. This volatility is crazy. Every time Powell speaks, you should just sit on your hands because there's no telling what the market's going to do. I guess the bulls are winning out every time, but I mean, that was a nasty sell-off, and I cannot believe that we reversed after making new lows. We made new highs. Today, gap down, and we're selling off a bit, almost down 1%. So we do have these red days mixed in, but overall, bigger picture, we're holding this move. I mean, you could say we have this nice flag going. There's the bull pole, and then we got this flag, possible formation. So although we're getting these red days in, we're getting these gap downs and selling off, like the bulls are still here. And it's convincing me, little by little, that we're going to continue higher. It's I'm bearish overall market-wise, but I'm a technical analyst at heart, and the chart says we're bullish. And hey, if I'm wrong about being bearish and we do move up, I'm happy because I'm playing the wheel. And when you're playing the wheel, you're either short puts or you're long shares, and when the stock market moves up, that benefits us. So I'm not going to complain either way. So that's where the S&P is looking. Now let's get into the wheel. So let's get that graphic on the screen. Here we go. You can see on the bottom, I have my shares, CVS shares 100 at 85.53. I sold a covered call on CVS at 89, and then a cash secured put on Activision at 73. So let's just look at CVS quick. Look at this. Excellent. So my blue line is my cost basis on the shares, and the green line is the covered call. I sold the cover call at 89. I received 75 cents for it. It had earnings this week. I knew that was going to happen. I knew the premiums on the calls that I was going to sell would be elevated, so I tried to take advantage. I tried to get a far away strike while also getting solid premium. 75 cents at 89 was kind of the Goldilocks zone for me. I could have went closer, the 87 strike, and got a lot more premium, but I liked the name. I liked where I got it. I was looking for a bit more upside. Even if it wasn't from earnings, just longer term, I wanted to get a little bit more upside, at least through this demand zone, maybe up to like 92 or something up here. So I tried to sell a little bit of a further away strike at 89. And sure enough, CVS, I guess they killed it. I didn't look at their report, but right here it says EPS and revenue did beat expectations. I know they're trying to acquire a company, a health company that trying to buy them out. I forget what they were called. Oak Health or something. Let's see, Oak Street Health right here. So they announced a buyout yesterday. That's why the stock gapped up like crazy, because the buyout price was somewhere around like 37 or something, 35, 37. And usually you might think that the company doing the buyout, which is CVS, would go down because that's a big expense for them, the acquisition. But CVS remained kind of strong, and then earnings today just shot this thing straight up. And now we are trading over my covered call, and we're actually trending higher. Even as the market is down 1%, CVS is going higher. You love to see that. And at this rate, we're going to get assigned. We're going to get assigned to 89 if it stays up here. And I'm fine with that. I could roll it out and up, possibly, to hold the shares and maybe get a higher exit. I might consider doing that because that is something I should be doing. If I really like the name and I like where I got it at, which I do, then it behooves me to roll these calls out and up to try to ride this thing higher if I can. Because this thing could go up to 95, 97. I mean, I had an initial target of somewhere up here, 92. I think it can easily get to there. So why not try to roll it out and up to maybe a 91 strike as best as I can? That will get me more share appreciation potential. And if I can get paid with a net credit to do so, that's a win-win. Obviously, I'd hate to miss out on this opportunity to get out for a nice profit if it rolls over. But that's where the confidence and probability kind of comes in. I do think where I got this stock, I mean, if you zoom out on a weekly chart and see where I bought it, I mean, look at my cost basis relative to the chart. I mean, this is great support. This thing could go maybe as high as 100, who knows? But at the very least, I think in the 90s is reasonable over the next couple weeks or so. So, maybe I will roll it. I won't decide a roll on the put or call side until Thursday at the least. It needs to be at least Thursday or Friday before I decide to roll it. That way, the theta decay, the time value on my either cash secured put or covered call is as eroded as possible. That way, when I roll it, I don't have to buy it back for as much, and you get a better gauge of where the price is on the stock, and you can better gauge whether or not it's going to be assigned or if it's going to be expire worthless, So I'm going to wait till tomorrow before I can even consider rolling it. And even now, I'm not sure. I do think I should roll it. Let me know in the comments what you guys think, if I should try to roll this thing out and up. If all things, remain pretty positive with CVS, I think I probably should. If I get assigned here, it's going to be like a $400 profit. So, I can't be mad about that. If I get assigned on my covered call, it'll be a $422 profit on the trade. But it could be more. If this thing really runs, it could be more. So that's a decision I got to make. And then Activision is the only other trade I got going on. I sold the 73 put yesterday. So on Friday, we had this massive red day, and then we gapped up like crazy on Monday and ripped up right here. So Activision all over the place. Has that Microsoft buyout news. There's a UK institution, I forget what it's called, that is reviewing this buyout decision to see if they'll allow it. There was some news today that led to this gap down on Activision that said they were saying that the deal with Microsoft and acquiring Activision might negatively impact gamers, maybe because it makes it more of a monopoly with Microsoft. owning Activision, that it might negatively impact, not by not having that diversification, I guess, in the marketplace. So in that competition, so it's getting a little more bleak that it's going to be bought out at the $90 per share level. But they did say they're going to make a definitive decision in April for the buyout. And in the meantime, they want Microsoft and Activision to work with each other to figure out a way to kind of ease the concerns about the negative potential impact on gamers through this acquisition. So they need to kind of compromise, figure out a plan to make that institution happy before they approve the deal. So with that kind of concern, we gapped down quite a bit. We did push up to 74.70. Then we sold off to 72.50. So my put was in the money. Now we're coming back out of it. So we're right at my strike, which is crazy because think about this. I sold the put Monday. Actually, no, it was Tuesday. So this down day was actually Monday, and I did not touch it because it had earnings. That's what it was. Okay, I'm sorry. I messed that up. It had a big down day on Monday. I could have sold a put, but it had earnings that night. So I didn't want to touch it before earnings. It had good earnings. That's why it gapped up. And that's when I decided to sell a put. I felt more comfortable. It's in a big demand zone that I have drawn out here. I'm happy selling puts in this region. So after earnings was out of the picture, I sold the put like right here at 73 for $1.30, by the way. That's a really nice credit. That's way more than I needed to meet my 30% annualized target, but I took it nonetheless. Thought it was a good level. And look at the price. The price is lower. I sold the put. The price went down. It's closer to my strike. You think the premium on that put would increase and therefore I'd be at a loss, but I'm not. You already saw it earlier in the video. I'm up like 60% or something on the put, even though we moved lower. There must have been a decrease in implied volatility, and that's the beauty of selling options is you make time decay work for you. We're one day closer to expiration plus possibly an IV dip leading to a profit on my put, even though the shares price is lower. So that's pretty cool. Good example of how selling options can kind of benefit when theta is working for you. But we're still pretty close to 73. We have all day today. Well, like an hour and a half left today, plus Thursday and Friday. So this could be an assignment. Who knows? I might consider closing it for the decent profit that I have, considering we are danger close to getting assigned. It might behoove me. I'm using that word again, behoove. Might behoove me to close the put that I have now and possibly sell another one at a lower strike. Maybe. We'll see. But today's almost over, so I'm going to definitely wait until Thursday, tomorrow, before I do any decisions like that. Same thing with CVS and the roll, which CVS is just going strong. I love it. So that's it. And here's the account one more time. Activision going well up 65% on that. I could close it right now for an $86 profit. I might consider it. I might take that gain and see if it moves lower and I can get a better strike. And then CVS is just crushing it. I got to decide whether or not I'm going to roll that out and up. Again, let me know what you think in the comments down below. Account's looking good. You can see that nice account value trend is really starting to shoot up this past, like right at the end of this little graph. It's really starting to slope upwards nicely. So thank you, CVS. And that's about it. And I'm going to keep looking at other names, other potential candidates to sell puts. Follow me on Twitter because I do announce these cash secured puts and covered calls on there. As soon as I sell them, I'll tweet about it. I've been quiet on Twitter the past few weeks. That was kind of when the wheel was not too active and I was doing credit spreads. But now that it's just the wheel, I'll be tweeting out there my thoughts and any positions that I get in or get out of. So that's it, guys. Thank you for watching. Leave a comment down below. Subscribe for more content. Like the video. And as always, I'll see you all next time.